So actually, I was gonna talk about Missouri first. Do you want to, we got them at the bottom of the outline. Do you want to get that? Let's talk about them first.
Yeah.
All right. So, what would you rate Missouri on a 1 to 10 scale in property value growth traditionally? Did we screw up everything by going to Missouri at the end? Okay.
I would rate Missouri on a property value growth a 4 or 5.
Okay. Let's do 4.5.
Well, what's yours? And then you could.
I would say, yeah, I would probably say 5-ish, just because.
Well, let's go with 5. I'm fine with 5.
The only reason I'm saying that, Walls, is because St. Charles County is been one of the fastest growing counties in the Midwest for like 20 years. Everybody thinks St. Louis, they think dying city or whatever, all that kind of stuff, because the city's kind of smaller. But overall, if I'm including St. Charles County and St. Louis County, I think it's a 5. Yeah.
All the rural areas.
Yeah, 4.5 to 5. Yeah. I agree.
Okay. Cool.
So middle of the pack, we get property value growth. We don't get huge swings up, huge swings down. That's why I feel like we're kind of right in the middle.
Yeah.
I like it. All right. Positive cash flow.
I would say, man, what state would I even put above Missouri in cash flow? Probably some.
Yeah, I think there's some. I think there's some that have lower costs. Like Oklahoma, you can buy a house for cheaper.
So maybe 7. Cash flow?
I agree with that.
8?
You can maybe buy a property cheaper in Oklahoma, let's say, which we're not using that as an example, so don't worry, we're not cheating too far ahead. We got other states we're going to go over. But I don't know that, I guess we'll just leave it at that. I don't want to get too into details on that because we're not doing Oklahoma, but great. All right, so beneficial laws. How would you say the laws are in Missouri, and specifically where we invest, that are good for investors, meaning they're fair?
I would say 8.
Yeah, I agree with that.
So what's that average? 15, 20 divided
That's probably
by,
average. That's probably the average of like a 7.
Yeah, right
so
under a 7, like high 6s.
Yeah. I think that makes it a B+, A- as far as our little grading scale system, because we're not 90 plus isn't an A. All right, awesome. So that's our thoughts in Missouri, and we know this market better than any. So that's kind of why we know we love Missouri. That's why we invest here. We could invest in other states. It's because you get property value growth. When it goes up, it goes up good. When it goes down, it doesn't go down too bad. You get decent cash flow. The laws are good. We can't kick a tenant out tomorrow because they didn't pay. We can send them a notice, then they go to court. If they agree to a payment plan, they get to stay. They stick to the payment plan, they stay. We can't even kick them out. If they don't stick to the payment plan, then we can't come out. So it's a fair system, in my opinion.
Yeah, I agree.
Cool. All right. Awesome. And part of that is there's just shitty landlords out there in every state and every city that kind of ruin it for everybody, I think, to a certain degree.
Agreed.
Okay. Cool. All right, Lucas, let's get on to good state, bad state. Let's get on to California.
California, probably one of the extreme on all these.
Yeah, I think it's probably the most.
I would say appreciation 8. You say?
Yeah, tough. I would say yes, because in general, real estate goes up. The few times, I think real estate goes up over 90% of the year over year we looked at. The few times that it goes down, California gets hammered, but it goes up so much, and real estate goes up way more than it goes down. So that's why I'll give it an 8, because when it goes down in 08, it got hammered, but that doesn't happen very often. It's going to happen once more in our lifetime, probably. So I'll give it an 8. I agree.
Yeah, so cash flow, probably. This kind of goes into laws a little bit, but I know not every investor is doing this, but it is a nice place to get cash flow. And on the West Coast, is they're doing those ADUs. Mm-hmm. So I think it affects my rating maybe by like 1 or 2. With the ability ADUs before ADUs, cash flow in California probably be like a 3.
Okay.
So maybe like a 4.
Okay.
You okay with a 4?
Yeah, I'm okay with the 4. That's on the higher end what I would do, but I'm fine with it. Obviously, it doesn't matter.
It's higher than New York is.
I would agree with that.
So maybe 3.
I think 3 is fine. So the ADUs help. This issue just the cost of the cost of living, the cost to own, and taxes, which are different than laws, all affect the cash flow. Obviously,
sure.
I think the top end's good, but the bottom end is super squeezed in California.
Yeah, I think. I think multifamily you can do it. I think single family would be a huge challenge to get anything to cash flow.
I agree, and people I know will not on here. I think Washington is probably similar to California.
Yeah.
Kong has properties in Washington. Our buddy Kong has been on the podcast. He was on last week actually, and he cash flows, but he's like an 8 and a 14 unit, so he needs that you need the multi. It works. It works pretty good with that
on a
point.
Single family, so probably three.
Let's say three. I agree. And Bootleg Snacks on YouTube, we are going to get to that question. It's a great question, so don't worry. We're going to get to that here in a minute before we get to current headlines. Make sure to share the show if you have not, by the way. All right, last one, laws.
Laws, yeah. I would say the ADUs help with the laws. It's a new law. Like, we can't do that here in Missouri, but what they're doing out there. And it's they're doing it to help people afford to be able to live in a place. An ADU is an auxiliary dwelling unit.
Yep.
That
it's not additional dwelling unit?
It could be. I'm not sure.
I don't know what
either
it is
way,
either.
Same thing. But you can put another physical property on a lot that you already have a house.
Okay.
And that is a very flexible type of unit you can do. You can convert a garage. You can drop in a camper. You could put a tiny house on it.
And you can legally rent it out or have someone live there.
Exactly. So I think that's pretty cool. So that maybe moves it up one from like a 1 to a 2 or 2 to a 3, but probably...
I'm going to say 2. I think
two.
I think a 1 to a 2 just because... just the laws of, like, again, it's just I hate to like harp on. I don't want to like kick people out and be a D-bag, but like, yeah, we see the horror stories. I'm sure there are examples where they get out quickly, but it is possible for people to stay a long time without paying rent.
For sure, yeah, and it's just like every law, it's just something you got to be able to work around and put systems in place. We know a lot of quality investors in San Diego and other parts of the country other parts of the state that are making rentals work. So it's possible, but a lot more challenging here than here in Missouri, I would say.
So California, to own like real estate.
13 divided by 3, so
like a
4.5.
4, yeah, that's higher than I thought it'd be. I'm good with it though.
That's about right.
4.5.
There's a lot of good things about California real estate, and appreciation is a main driver.
Yeah,
there.
most people in California
buy off appreciation.
But we have 200 community members in California. A majority of them invest remotely,
especially if they're trying to execute the BRRRR strategy.
Correct.
That is probably damn near impossible.
Yeah, if you go to California and you put 40% cash down on a duplex and like that, but that's not realistic for a lot of people. Shoot, just wait till we get our main headline. Freaking 40% down on something is not realistic. Freaking $180. That's nothing.
No.
Yeah. We're gonna argue a little bit. It's fun. We don't argue a ton. I'm gonna embarrass you. All right. So California, I would say, is a C-.
Sounds good.
Indiana.
Why don't you tell us about Indiana? You know a little bit about that.
I do. Yeah. I like Indiana.
Let's talk appreciation.
I look at Indianapolis as what like St. Louis could be.
Yeah.
It's been a really growing city, clean, very well done. They've hosted the draft there a couple of times. I've been there. People like it's a beautiful city. The layout and
nice.
It's the Midwest. It's
been there several times.
Yeah, it's Indianapolis. I feel like that's what I would like to help make St. Louis be, because I love St. Louis, but it hasn't had that growth recently. So Indianapolis specifically, it's just the main market I'm talking about. But no, I like it a lot. Before we get into some of the things we talked about, it's had a lot of job growth recently. A lot of people going to Indiana, and then the taxes, which taxes aren't really, we're more doing beneficial laws, but the taxes are very friendly, which help cash flow.
Cash flow, for sure.
So Indiana's, I don't know it yet, Lucas, but it's going to be a good grade.
Good. So appreciation, and I'm going to relate it to Missouri more than any other.
100%. I think I look at it just like, I'm not trying to. I love Missouri. Kind of like a little better Missouri in my opinion.
Yeah. Cool. Specifically Indianapolis, right? All right. So appreciation, probably a 6.
Okay, I agree. Probably a little better than I agree.
Yeah.
I'll let you write them down because you got a better system. Look at your system. Look at, like, you have it like checkered and.
Mine's not even that good, but I can't understand.
That's my system to mark them.
All right, cash flow in Indiana. What is the median house price in Indiana? Do you guys know that?
We can look it up maybe
versus
and let
Missouri?
us. Yeah,
I would say very similar.
Yes,
to
I would. Yes, I probably similar. But Indianapolis might be a little bit more, but I bet we have like Springfield, Columbia, Kansas City. So our over the state might be pretty similar. Median house. Type it. I'm gonna write it. Median house price, Indiana.
So I'm gonna go cash flow when thinking the median house price, because median house price.
236,000.
All right, go to St. Louis real quick just to compare apples to apples. I know the actual number, but was that Indiana or Indianapolis?
That was Indiana.
Indiana, $236,000 median house price.
Missouri
Missouri
is
is
238.
238. So
Wow,
very
so
similar.
they're same. So
I would say, with all else being equal with fairly equal with taxes and insurance and stuff, probably about the same cash flow.
Okay.
If you got a very similar median house price, I would say.
okay.
But I would say lower the median, probably more likely to have higher cash flow
I agree with
potential.
that.
Would you
Yep.
say that?
Mhm.
All right, so 7 on the cash flow. You good with that?
Yep.
Because there's like you said, there's some other states that are probably more cash flow friendly, a little less on the appreciation. What's beautiful about both Missouri and Indiana is you get a little bit of both.
Yep, I agree. And then laws, to not like have we got plenty of time, but laws I would say probably similar. Similar. I know they're pretty normal.
Similar to Missouri?
Yes, I'd say give it an 8. Yep.
Cool.
So-
that is 21. That is exactly a 7 average. So
Yep. So slightly better. I think that makes sense. A little bit better than Missouri.
yeah, love it, man.
Awesome. Perfect. All right. Let's keep on rolling. Texas.
Yeah.
So I'll intro Texas a little bit. Obviously, incredible growth in the economy and people moving there. It's a really, really popular state. You don't have to pay, an income tax in Texas, which is really nice. So that allows people to have a little bit more money to potentially pay rent. And it is a very landlord-friendly laws.
Yeah.
You can get people out pretty quickly, I think. So those are positives. The one negative, and I only know this because we have 200 students in Texas, is the real estate taxes are pretty hefty there. That makes a lot of properties not cash flow. The cost of living has gone up a little bit because so many people move there, and then the real estate taxes really cut into it.
And something that I just thought of too that we're not going to include in our big 3, but in these markets that we're going to get to that are very high grades, we're not the only one that knows that. So there's a lot of other investors.
Competition's higher.
Competition is higher. So just because the market is ripe for it doesn't mean you can get the deal because you're fighting.
Well, you still have to find.
There
are no deals just falling off trees in any market right now and for a long time.
Yep.
I agree. Okay. So there's my ratings for that. So my what do you want to call it? Just kind of setting
precursor.
That's the word I was looking for.
Preamble.
T. York, were you working on the calculator over there? Or are you working on Facebook? Which one? Data boy. Just making sure. All right. Okay. Just my micromanaging from a live podcast.
Yeah.
All right.
Get them boys a mic, dog.
We need to. Well, we got a lot to figure out this fucking thing, but okay.
Appreciation in Texas. Do you think it's California level? It might.
It's pretty damn close. I would say it's probably
7 or 8.
I would say an 8.
Okay, let's go with an 8. I'm good with that. And cash flow is better than California.
Yes, I would probably. My initial gut reaction is a 5 on cash flow.
I'm good with that, but not as good as like Missouri or Indiana.
This is cool. Like, so we do this with like work stuff, like with like team members and company stuff. This is an interesting way to like systemize a rating system.
Yeah.
I like it. I like where things are ending up.
And then laws in Texas, probably 9 or 10.
I would say 9.
Yeah, let's go 9.
Yeah, I would say 9.
Okay, so that's a really good score. That's 22.
Yeah, so
that's surprising.
Yeah, it seems high to me. So I think, it is what it is. I think
maybe drop appreciation to 7,
and then
I don't think you're getting quite the annual increase that you're getting in California. I don't know.
No, I don't think so either.
Let's drop appreciation to a 7. Cash flow 5 might be a little liberal too. I don't know what the cash flow situation is.
Yeah, I just knowing, I know that. It's, in my opinion, if you want cash flow and appreciation, Texas is not Indiana and Missouri.
Yeah.
So that's why. So let's knock that down to a 4.
Okay.
And then that gives us 19. Yeah, 9 and also a 9.
Yeah, 19 then.
Yep.
All right, 19. Good.
Oh, that's 20, right?
Still set 20. Yeah. So right the same as Missouri.
Yeah, maybe.
Yeah.
I mean, especially because you get the appreciation, that's huge, and then your cash flow. The other thing, Walls, if it's really friendly laws and just hopefully you don't take advantage of it, you can probably cash flow a little more if you're able to quickly get somebody out if they're not paying.
Yeah, good point.
So that will help cash flow. Because like we always say,
what doesn't help cash flow in Texas is high median price.
Yes.
Right? What are we at on median price if someone wants to look at that real quick? And those taxes that you were talking about, those real estate taxes.
Median price. So what I was saying was you can't... Texas is, I don't think it's as good of a market as for land. So 304.
Yeah.
I mean, but we're taking all like to account. There's a lot of houses, a lot of rural houses in Texas.
Yeah.
So
yeah, there's probably some good submarkets of Texas that are probably awesome, like an hour away from some of these big metros.
Tyler, Texas is a growing lot. Plano, a lot of those. We had. I was on a coaching call this morning, and we had there was 13 doors that were picked up recently under contract.
in that one group. That's amazing.
And then there was 5 houses getting looked at today in the group.
Nice.
Pretty cool. Pretty active. Yeah. That's pretty cool.
That's that Wednesday call. Powerful group of people show up.
That is. We just had somebody join our community that's 116 rentals.
That's amazing. That blew my mind. That's got to be the most, right?
Besides us, yeah, 100%. Yeah. Okay, cool. All right, let's move on. Probably won't do all of these because it's kind of, we'll probably do, what do you want to do? 3 more, Luke? Which 3 do you want to do?
All right, let's do.
We got to do NC.
I feel like New York is going to be similar to California. I already feel like a little less because you don't have the ocean or weather that you get in California.
So do you want to do, so you're saying it's no point in repeating?
No point in repeating.
I think we should do Illinois because it's different. I think a little bit different.
Let's do Illinois because it's Midwest.
Illinois, North Carolina, and Georgia. Does that sound good?
I like Georgia.
Okay.
Let's do Georgia, Illinois, North Carolina.
Yep.
Georgia.
I mean,
Georgia and North Carolina
are similar. Just North Carolina's my favorite market in the whole country.
What about Florida?
Okay, let's do Florida. He doesn't have it up there, but yeah, let's do Florida. He asked me if we should do Florida. I said no, but if he can do it, if not, don't worry about the graphic we put.
I know, so
but those are 3 different ones. I like that.
Yeah.
Okay. Illinois.
Illinois. So our neighbor, right?
Yes.
So our city. St. Louis.
Real quick, it's tricky because we're talking the whole state. Like you go to Quincy, Illinois, where we go to Quincy, Illinois, where
that's a good point.
Where the guy that joined our communities from, he has 116 rentals. It's a $6 million value. But then you go to Chicago, so we're just trying to. I'm mainly taking like suburbs of big cities, Lucas. That's just what I'm thinking. Does that make sense? Because that's where most people live in these areas.
Just some quick math. Chicago, I believe, takes up about 70% of the population of the whole state.
It does. 100%. So. I've heard that similar. So just for framing, I guess, but framing it, when we're talking states, we're mainly talking the bigger cities and suburbs in those bigger cities. Yep. So we're mainly talking Chicagoland is what we're mainly talking here.
So for reference, Illinois is our neighbor. We could probably get to Illinois in 40 minutes, give or take, from here.
You're driving 60 minutes, but most people drive in 40 minutes.
Yeah, you drive in 12.
I drive 10% over the speed limit. You drive 10% under the speed limit.
Put your seatbelt on at least.
I do.
Good. St. Louis, MSA of about 3 million.
Watching from Ghana.
MSA of about 3 million, and 2 million of that is on the Missouri side, and about 1 million of it, give or take, is on the Illinois side. So, but it's separated by a river. But you buy a house in Illinois and a house in Missouri, and it's very, very different.
Very different.
It's put it this way: entirely different market.
We're the biggest home buyer in St. Louis, and we don't buy in Illinois. We have the resources to 100% buy there, and we don't.
Right. So even though we're not talking about St. Louis as being part of this Illinois conversation, just in that short distance, it's night and day difference.
100%.
Okay. So let's talk. Let's go through our things, Sam. Appreciation for Illinois.
Yeah, I would say it's not as much.
I would say it's not as good as we think either.
Yeah, obviously, like when I go to Chicago, Danny, like North Shore, though that gets it. But overall, Chicago, not really. I would say I would say 4, 3 or 4.
Missouri, right?
Maybe.
We put Missouri at a 5.
Well, do you want me to look it up? So average house price appreciation. Let's look at average house price appreciation Illinois. Let's just do it right now. So what are you thinking it's going to be?
I was thinking it's
7% over the past year.
Okay, that's about us, right? That's very similar to us.
I think we were a little bit less, but maybe not. So maybe you're right. So maybe slightly better Missouri.
Yeah.
Missouri is 5%.
Okay.
Is what the quick Google search says, obviously.
Yeah, for sure. So let's put it at a 6.
Okay.
You
Deal.
okay with that?
Mm-hmm.
Because there's some really high price points that probably skew those numbers.
There's a lot of freaking money in Chicago. Yeah. It's insane. It's a huge city.
Huge. All right. On the cash flow side, with those higher price points and with
Taxes, crazy. Yes. Property taxes, insane what they pay. Cost of living, everything over there. Cash flow is not very good there.
Cash flow is not very good there at all. 3?
Yeah, that's fine. I think 3's good.
3's good?
Mm-hmm.
And then the laws aren't super landlord friendly.
No, they're not bad as California, New York. But what do we give California?
2.
What do we give New York?
We didn't do New York.
Okay, I would give it a 3.
3? I agree. All right, so we got 9 plus, we got 12.
Yeah, that sounds about right. It's tough. The only people that I know that own single-family rentals over there is Danny, and he has like literally, I've seen it, I've been there several times. It's a like a $450,000 house, Lucas, that he rents for freaking like $4,600 a month, a single family house. So it's crazy high end, people with a lot of money that just don't want to own, and there's not that many people out there, so it's hard to do. Is my point.
Is there a short term or midterm market in
yes,
Chicago?
There are.
Okay.
Well, short-term, midterms help in every market pretty much.
Yeah, but sometimes there's municipalities here in St. Louis
that don't allow
our county that
don't allow short-term, but not midterms. But yes, you're right. There is a market up there, especially there's a lot of hospitals and stuff up there.
Yeah.
But I'm just going. I have a little experience. So our CFO and my buddy Danny, he owns a few rentals up there, and they're just like, it's like owning a renter in Chesterfield kind of thing. So they just if you're able to
a little higher end,
and you can charge way higher rent gets charged.
Yeah. Cool. Well, average of a 4 for Illinois.
Sounds right.
Would you rather? Let's talk about. Gosh, this is a good question. A $800,000 house. Would you rather have in Southern California or outskirts of, or a nice part of Chicago? Let's say a good part of Chicago.
For cash flowing rentals?
Just for your asset to own. Well, whatever you want to do with it. Whether you want to short term it or long term it or.
I would probably, asking
close.
me, I'd probably rather Illinois just because it's closer to me. Get up there and I have but yeah, it's close. I wouldn't love either.
They have the same score.
If I can short term, I would probably maybe do California
if it's
available.
Score.
Yeah, but because that's more of a travel destination place. Yeah. But midterm or long term, probably Illinois.
Okay.
What about you?
I'd say California.
Well,
probably.
all the way.
Yeah.
You're such a fucking hippie.
I don't know. I think it'd be cool to own a house in California.
I'm kidding. I know. We probably will one day.
But they got the same scores. That's in our calculations, so that it's a close conversation.
Makes sense to me. Perfect. This is a fun conversation.
Yeah, it is.
Good idea on the outline, Shane. All right, let's do my favorite market, just based on what I know, what I see for owning rent properties in North Carolina.
Okay, so we'll do North Carolina, then Florida. How about that?
So they have a lot of tax incentives for owning businesses over there, and I would assume I don't know if that translates to real estate, and then population growth. That's been one of the most moved to markets. It's got Charlotte. You can go to the Appalachians, not super far. The ocean's not super far, and it's decent weather. You get a little bit of seasons. It's not like just the same season, but it's really good. I love North Carolina as far as the market goes. I've been out there to Duke and Greensboro. I've been to Charlotte. So I've been out there a few times. I like North and South Carolina both a ton.
Yeah. Yeah,
and Georgia, all that right there.
Much, on that southern East Coast, I would love to have aspirations of doing that. I'm sure I will one day. But
you need to go Savannah, Georgia. It's beautiful. If you have, it's awesome.
From Savannah to Charleston,
and Hilton Head, all that stuff up there. Yeah,
up there a little north too. Yeah, but a lot of people moving to North Carolina, which is a good thing. You want people moving to your state.
Yes,
it's going to drive prices up of homes.
I'm looking at values right now,
and it's going to drive prices up of rent. But that means you're in a desirable area, right? So if you own real estate in that area already, good for you, because people moving to your state is going to drive those prices up.
This is a perfect example of when populations flood there and you get a little bit over supply of growth.
Yeah.
So I'm giving you a little bit of a hint. It's not as impressive recently in the past year, but in the past 3 years it is. What do you think the past year appreciation over there is?
I'm not sure. We saw on the coast in the past year definitely come back to reality.
So it did. Yep, you're right.
So is there any?
6.
6? Okay, that's good.
Past 3 years, 30.
Yeah, total or year over year?
And up, it says last 5 point whatever percent since February 2023. So that's since February. So yeah, year over year-ish. And then 30, it just says 30.8 in the last 3 years. So I don't know.
So about 10% average
so it's,
year over year?
Yeah, it's 330 now. So it's way more than Missouri. And it's, so that's my point. The average house over there is 330 grand. It's gone up a lot.
Yeah.
But still.
But we saw the real appreciation markets, like the Miamis, the Phoenix, the LAs, San Diego's, we saw 30% 1 year.
Yeah, I think that I would guess that's obviously the total time.
Total.
Yeah,
so
probably 10-ish% a year.
So it leads us right into appreciation.
Yep, and I think it's great. Probably not California, but more than Missouri and Indiana. So where are we?
So that puts us at either, I would say we have Indiana at a 6 and Cali at an 8. So maybe a 7?
I would say a strong 7. I don't think if we did California as 8, then it can't be that, but I would say strong 7.
Yeah, strong 7.
Cash flow,
Cashflow's still
it's
a
good.
possibility.
It is good over there. With being able to, a lot of the markets known over there, there's like affordable. The laws are good. The taxes are fair. So cash flow is going to be similar to Missouri, I think.
7. Let's do it a 7.
Yep.
And laws, I'm not super familiar, but
the laws for anybody I know that owns real estate, it's not like an issue. So I'd give it similar to here too.
So 8.
Yeah.
Okay, cool. Just strong across the board. 23.
Yeah, that's 22.
22.
Yeah.
Still
22. Yeah, no, it's just everybody I know that goes over there. There's some investing groups over there. It's a really, really strong market. Devin's out there.
That's
our boy Devin.
Super unique to have the appreciation and cash flow be that high. Like you see it even in Missouri, like little less appreciation, but we get the cash flow. California, you get the appreciation, pretty much no cash flow. It's really cool to have a balance of both.
And that's
of those.
why I feel like I kind of guided the conversation to give them a good score, but I think it's accurate. That's why it's one of the top most people put it in their top 5.
Yeah. And it's expensive, but not unreasonable.
Yes, correct.
You know what I mean?
Mm-hmm.
At what was that, 330 or so? Yeah.
I think because I think you get the big crazy markets. I still think the median in the United States is well over 400, so it's less than the median house. You can get it for cheaper there than average median. Median average are different. But you also get so that's why, and I would say 10 years ago, it wasn't probably that, or 15 years ago. So the states and cities do fluctuate. They kind of breathe, I like to say inhale, exhale a little bit. So yes, correct. So it's on a inhale if you're inhaling good property. So lastly, Florida gets a little bit different.
This is
and we know a little bit about Florida.
We do. This is probably the wildest market, I would say, because it has so many big cities and it has different, it's different throughout the whole state. You got
like Miami,
Southern Florida, Central Florida, Panhandle, Northeast
They're
Florida.
all so
They're
different.
All very different.
Panhandle, Miami are way different. They're on the beach.
Different.
We got Orlando, Jacksonville, which I just was in Jacksonville, been in Orlando several times. Our boy Jakey's down there.
And you get
way different than Miami.
Yeah, and even like Southern Florida is different from Miami over to the Fort Myers side and everything.
And then Tampa is like one of the fastest growing and is somewhat affordable. It's not like Miami. And
Tampa's probably one of my favorite cities.
Yeah, I agree.
Yeah. And all the sub markets of St. Pete and
by top 10 city, there's probably 2 or 3 in Florida.
Yeah, man, it's what a fun market to be a part of.
Yeah.
It's wild. I don't even know where to start with this, but appreciation's got to be a lot.
Good. Yes, I agree.
It's crazy because you have California, which net people are technically moving out of.
Correct.
But you still see appreciation now.
Because I think it's got the 5th biggest economy in the world because of Silicon Valley.
Yeah, and it's just got beautiful weather and landscapes and everything.
Okay.
With Florida, you probably have the most people moving into the country. Is that's the highest move state?
I believe so. It's close if it's not.
And you got the beach. You got these luxury markets. So
it's a unique.
I would say Florida appreciation.
What do you think the average house price of Florida is?
It's again like
North Carolina's 330. We were 230.
We're talking about these big cities, but there's also some rural Florida as well.
Because St. Charles, the average house price is like 330, but in all of Missouri, it's 230 or whatever.
Yeah, for sure. So all of Florida, I would say, 500,000.
397.
397. I was gonna say 400.
I thought you were gonna say 400 too. I was like, damn, you were close.
Yeah.
Which is that's North Carolina was 330, and then it's got
double us.
It's got over the past year, it saw that correction 3% appreciation.
What's the past 3 years?
It's just not popping up. I can see.
I would say it's probably like.
So over the past year from the first quarter of 2022, so it's the past over like a year and a half has been 13, but the past year has been 3, so it really slowed down.
Yeah, we're getting back to more normal,
which is a good thing. Yes.
So appreciation, man, I would, even if the numbers don't exactly say it, I would rank it as high as California.
I agree. I'm good with that.
8.
Okay.
Man, cash flow's there too.
You can get cash flow there a little bit. Yeah, it's got no state income tax again, which helps the renters, is my point. The renters are able to afford more. It's not as big of a hit on them.
I wouldn't say it's quite as high as North Carolina,
I
Missouri.
think, well, the point is, I think we could go to the outskirts of Tampa and buy a single-family rental cash flows.
Me too.
And Tampa's a really popular, hot-growing city.
Yeah, I know a lot of people with rentals in Jacksonville that are buying in Jacksonville.
And Orlando.
Too,
I've been to Orlando. You can cash flow there.
Yeah. And I know Grant Cardone, like he knows a little bit about real estate, right?
Yeah.
And he buys a lot of real estate in
As
Florida.
much as he probably says, but I'm kidding.
Yeah.
No, I'm kidding. He knows a lot. Yeah.
Yeah. Ben Mala buys a lot in Florida too.
Yeah.
All different parts of it. So those are all the bigger multifamily guys. So obviously there's something there. But on the single family, you go out to the outskirts, I think you can find it pretty well. Can you find a condo in Miami that's going to cash flow? No.
Yeah.
Probably not.
You can't find a condo to do the cash flows in St. Louis, so it's a similar thing. And we have students down there that are doing. I met some in Jacksonville when I went there. We have students that are buying cash flow rentals in Florida.
Yeah, I love it, man. And I think Jacksonville's a great market to do it because it's probably like the redheaded stepchild of Florida.
Yeah.
But it's still Florida.
Yeah.
And everybody's moving.
Jacksonville is the biggest city in the country. It's like 800 square miles. It's like the biggest like geography city in the country.
I did not know that.
Yeah, isn't that wild?
That is wild. St. Louis is probably the smallest. It's so little.
Yes, it is. So I would say, so what you said, I was kind of thinking about thoughts. What you said, not as good as North Carolina, Missouri, but still probably decent.
Six on cash flow.
Yep.
And laws are, I believe they have pretty strong laws.
Yeah, I don't think it's quite like Texas, so I would put it between Missouri and Texas. Yeah.
Well, we did Texas. Yeah, 8 and 9 was for Missouri and Texas. So 7.
I would probably say 7. I bet. Yeah.
So that's a 21.
Yeah.
7 on average.
I like an overall array. I'm sure there's tweaks, and if you have your opinions and thoughts, obviously we don't. I've looked up so many things on goods, and most people say cities as they break it down for, but they look into a ton of different stuff. But overall, I like where we landed on most of those.
Yeah, and I would say like just creating this and creating the A, B, C class of the United States. Probably, what do you think? Like 7+ would be A, give or take. Maybe not.
Well, I think that's probably fair. We should probably do this for our community.
We should. This is fun.
Yeah. So I'm gonna make a note.
You could do just a survey.
Yeah, like survey and just give our opinions of
or in others markets.
Yeah, because a lot of people want to invest remotely, so we give a little more guidance there.
Very cool.
Yeah, want to get to the question?
Yeah, I want to get some questions. So there's a couple. Can we scroll up on that at all? We missed JTG's first question. He has some follow-up on it below, just some clarification.
If we can't, we can get the bootlegs. Let's get the bootlegs while you're doing it. I have $150,000 of equity in my home, and I'm just successful coming out of a Chapter 13 bankruptcy. What are some options? What are some options for you? So that Chapter 13 bankruptcy is going to hurt a little bit.
Yeah.
So your options are, you have $150K equity. Your options are to tap into that equity and flip. What are you saying?
What do you mean flip?
Like flip a house.
Well, he's saying how to tap in that.
Oh, I have what options? So if you,
Number one is you sell it.
Yeah, sell it. That's tough, but yeah, I don't know that you'd be able to do a HELOC if you had just went through Chapter 13.
And I don't know what people's qualifications are on bankruptcies for renting. So it maybe don't, because it might be challenging to buy another house or rent another house. You could go a private lender route and put a second on it with a private lender. You could do that backed by real estate. If banks do it, a private lender would be willing to do that.
Just let them put a lien in your house while they give you money. Yeah, that's an option. And then be in Chapter 13. And my thought would be, if you want to get a rental, you probably have to partner with somebody, or do creative financing sub to owner financing. That because you don't need a bank. So it's tough. You're gonna have to avoid banks for a while, in my opinion. So flipping, wholesaling avoids banks. Private lenders with partners avoid banks, or creative financing.
All right. We got JTG's question up on the screen now.
You read it.
All right. I should be getting 150 to 300K plus. Not sure how, but should be getting that. My plan is to learn flipping first, then start accumulating rentals along the way, and work up to apartment complex. Do you think this sounds like a solid plan? Thanks, guys.
JTG, first off, yes, solid plan. B, if you're getting that much money, you need to get, I don't rarely say this, you need to get some type of guide. Like, it doesn't have to be our community, but if you have that much money, you're going to be able to move so quickly if you do things efficiently. Spending a few grand on like the correct coaching mentorship community, you're going to move so much faster. With that much, depending on where you want investing, how hard you want to work, you buy 5 rentals this year. But if you do it on your own, I'm pretty confident you're not going to buy 5 rentals or flip. So, and then what's SLC? Connections in South.
I think it could be St. Louis City.
Yeah, but anyways, DM me on Instagram, JTG. I can send you some information. But yeah,
we
you just
offer mentorship.
Yeah, we have a community mentorship that literally, like I said, gives the systems and processes to flip, wholesale, and buy rentals. Everything you want to do, we do it, and we do it the right way.
In general, I love that plan. You got some
Salt
cash.
Lake. Yeah, we have community members over there in Utah for sure. Yeah,
and I love that plan. I think. I think
it'd be so dangerous being
I
able
would do
to
a couple flips, you know what I mean? Maybe just learn the process, but you don't need to do a lot, especially if you're sitting on 300K. You got a little runway, so really start to transition to those rentals as soon as possible. I would say.
I agree, and then you can always intermingle. We figured out passive active income are needed if you want to do it the right way. So the goal, I think, would you try to get a handful of deals a year and keep some as rentals and flip some. And
a lot of people try to teach going to multifamilies right away.
It's tough, man.
We just don't love that idea. You can build up credibility along the way with a little portfolio of single family rentals and then jump into multifamily is my plan.
Why? So we got turned down for the first Geraldine loans because we didn't have enough experience or credit or what. I always tell people it's hard. The banks were a little tighter then, and then they loosened up. Now but a 32 unit we couldn't get.
Definitely experience. We didn't have the down payment.
We had that was part of it.
So they wanted to see some skin in the game for us, and we were owner financing the down payment, and they didn't like that.
That was it. Okay, that was it. Because I would think if we had the 20%, they would have approved it. Because we had 20 rentals at the time, probably.
Yes, they would have.
So it was more of the owner financing. But if we had 0 rentals, I don't think they would have.
Correct.
Okay, cool. All right, that was fun. Hopefully everybody enjoyed that. We're going to ask you to share this show. Whether you're listening or watching, please share whatever platform you're watching. If watching the view or listening to the audio, I'd appreciate a share this with a friend. If they live in a state or you want us to do different states, we can do that again in the future. So just sharing is caring, and we appreciate that. Thanks for watching. We appreciate it. Make sure to hit that like button, comment with something you learned, and make sure to subscribe to this channel. We give away more free advice on how to create wealth based on things we actually do every single day than any other channel on YouTube. Make sure to share this with a friend because our mission is to inspire you to think differently about freedom.